Hi, this is Brant Speshart with Steward Wealth Strategies, and I just want to say thank you for tuning in to this edition of Managing Your Wealth for 2025. We at Steward Wealth Strategies believe that an educated client is our best client. Just like you, we want to make sure we're giving advice that is based on knowledge and fact so that we can help you make decisions that are in your best interest. And we want you to have knowledge because in this day and age, we're all being fed information from somewhere. But we want to make sure that our clients can make good, wise decisions. So that's why we host webinars like this, share information via newsletters and other mediums. And I just want to say thank you for being a client of Steward Wealth. So there are six key areas of financial planning. There's a lot more to financial planning than just the stock market and investments. There's retirement planning, a lot of key decisions when it comes to preparing for retirement, but while you're in retirement, investment planning, are we in the right investment mix based on our goals and objectives, based on my comfort level as far as risk tolerance is concerned? Markets are extremely volatile. Am I in the right investment mix based on my long-term needs? Tax planning. Most of us want to make sure that we don't pay any unnecessary taxes, and taxes, can be a drag on long-term performance when it comes to investments. So we want to make sure we're being wise, good stewards, tax efficient, give unto Caesar what we need to, but at the same time, let's be wise with our tax planning. And then protection planning, hey, are we in a good spot in case something bad happens? Estate planning, this is one area of financial planning none of us can avoid. Only the Lord knows how we've got on this earth, but we all want to make sure that we bless our family with a well-planned, thought-out estate that isn't overcomplicated or too messy, but really just a way to leave a legacy and tell our family we love them by making it simple and make sure it's appropriate based on what our wishes are. And then lastly, the last area of financial planning we love talking to our clients about is generosity. How can we help you give? How can we help you leave a legacy? How can we help you make a difference for family, friends, community, as well as kingdom impact as well? So 2024 actually ended up a really good year for investors. We started off 2024 after a banner 2023, and a lot of analysts thought 2024 was going to be a really rough year. There was a lot of volatility, but 2024 ended up very positive, and there were a lot of highs hit along the way. But like any year with investing, there's a lot of volatility, and a couple dips last year had investors really feeling uneasy. But for those that hung on and stuck with their investment strategy, 2024 ended up being a fantastic year with some new all-time highs hit along the way. Now, 2024 was a great year. We still had concerns about inflation, but moved a little closer to the goal. Interest rates were cut. The economy was strong, but volatility returned in the latter part of last year, and we've seen a lot of that volatility. In fact, we've seen some extreme volatility so far this year. So in 2025, we actually had a really good start for the first few weeks of the year. A lot of investors and clients saw nice positive returns in just a month, month and a half. But then all of a sudden, over the past few weeks, we've seen sudden declines and we've seen a lot of extreme volatility with the current administration's announcements regarding tariffs and other measures. The Federal Reserve last year did cut rates a couple times. And right now, the Fed funds rate is kind of in the mid fours. You can see based on this chart, we had record low levels for quite a while there, about zero as far as the Fed fund rate was concerned. But right now, where we're at are more reasonable as far as those levels are concerned. Another headline you're going to see on a regular basis is regarding inflation. 2022, we had inflation that was extremely high, over 9%. However, in 2025 now, we've actually had inflation reports of less than 3, and that is moving a lot closer to the Federal Reserve's target of 2% inflation. But just because inflation's less does not mean prices are necessarily going down. Lower inflation means prices of goods and services are just going up at a slower pace, not as quick as they once were. Because if you go grocery shopping, or if you go to buy a home or a vehicle, we're still paying higher prices than we were 2, 3, 4, 5 years ago in many regards. Now, something to keep in mind though, if the Fed does adjust interest rates, that can cause volatility for conservative investments like bonds. What happened in 2022, we had really low interest rates, had high inflation, so the Fed raised interest rates at the fastest pace in 40 years, and that increase caused a lot of volatility for conservative investments like bonds. When interest rates are raised and they go up, bond prices generally go down. When interest rates are lowered, bond prices go up. So it's important to pay attention with what's happening in interest rates because that can affect investor portfolios. Now, if you're aggressive and you have no bonds in your portfolio, this is nothing to be concerned with. But if you're retired and you're a little bit more conservative, and you don't like volatility, then you probably have some more conservative type investments in your portfolio, such as cash or bonds. Now, when we think about interest rates, though, sometimes we think about it from the savings perspective and, hey, what type of rates are out there? So a good measure is just to look at how the Treasury is paying right now. So at the beginning of 2024, the 10-year Treasury is about 4%. At the end of last year, the 10-year Treasury was about 4.5%. And right now, the 10-year Treasury is about 4%. So we're seeing rates stay pretty close. We are experiencing oops, we are experiencing uh, something that's a little more normalized than what we've seen over the past couple of years, where the longer the term, generally the higher the interest rate. There were a couple of years where, hey, longer term investments actually were paying lower interest rates than shorter terms. But right now, the 30-year Treasury is paying close to 4.5%, where the 5-year is paying close to 4. Now, right now, when you go through times of volatility, you may think, wow, making 4% sounds fantastic versus the extreme volatility that we're seeing right now. But just remember, there is a cost to safety over the long term. The number one concern most retirees have is they don't want to outlive their money. And I know volatility is what makes most people think about that, but it's really inflation that we have to keep in mind because we know the stock market's going to have volatility, but it will go up long term. But the other thing that'll go up long term are the cost of goods and services. And historically, inflation is about 3%. The Fed's target is 2, but right now we're at about the 3% mark. And if you think about that, that means my money has to earn about 3% long term to keep up with inflation. Well, that's fine, but most retirees also want to spend their money. And if they're withdrawing 4% and they need to earn 3% to keep up with inflation, that means a lot of investors really, if they want to have about the same portfolio over a lifetime, they probably need to earn 6, 7%, give or take, over a lifetime. It's hard to do that with very safe, non-volatile investments like cash. So this is why a lot of times we focus on your goals and objectives in your long-term plan and make investment recommendations based on that versus make lifetime investment decisions based on today's headlines. We want to focus on lifetime investment results. But the reality is the headlines in 2025 are like they have been. They're concerning. Inflation's still a concern, interest rates are a concern. We still have global global issues, in with Ukraine and Russia, as well as with Israel and the Gaza Strip. But then also we've got news coming out of Washington, D.C. on a regular basis that can cause concern. Now, it is important to understand some of the terminology you may hear because, again, knowledge is power. The Federal Reserve, or the Fed, as you often hear in the news or maybe even conversations or you read about it, the Federal Reserve is basically the bank for the United States. And what's interesting is the Federal Reserve really has two primary focuses. One is to maximize employment. So, they report a lot of times on employment numbers, but also to stabilize prices, and that has to do primarily with inflation. Now, the Fed is supposed to meet 8 times this year. They've met twice so far, and interest rates have stayed the same. The next meeting will be in early May. Corporate earnings have been strong. At the end of last year, corporations were doing very well. Earnings were strong, and that is really what drives a lot of long-term stock prices. Now, short-term volatility is really caused more by human emotion of fear and greed, but long-term valuations for companies are based on earnings. We do keep up with the Fed as far as interest rate announcements. We keep up with inflation, but we also keep up with, hey, how's the economy doing? How are US companies doing? What do earnings look like? That is really important when it comes to your investments and type of investments in a portfolio. So our focus is to help you make wise decisions based on your goals and objectives. That's why we have an emphasis on financial planning. Let's develop a plan based on your long-term goals and objectives. And let's have that plan look at all areas of your financial life, not just one particular area, so that we can help, derive better long-term outcomes. And we at Steward Strategies believe, hey, it's better to be prepared than later on have to repair. So please allow us to help you when it comes to different financial decisions that you have to make. Because when it comes to investments, investments are volatile. The stock market's volatile in the short term, daily, weekly, monthly, quarterly, annually. But over the long term, equities have grown. Equities have created a lot of wealth. And what we have to remember is that the investments in our portfolio are generally made up the great companies of America. And I think about some of these individual companies and how they're part of our portfolio. These great companies are thinking about innovation. What types of products, what types of services do consumers need? And regardless of whether you have Republican or Democrat in office, whether you have high inflation, low interest rates, high inflation, or high interest rates, businesses are still going to focus on one, how can they produce a profit? And two, how can they bring value to their shareholders? It is very important to focus on the long term when it comes to your investment strategy. Don't make short term investment decisions or don't make long term investment decisions based on short term investment headlines. Now, a phrase you may hear is correction. We have hit correction territory a couple times. A correction is basically where the market takes a drop from a high of about 10 to 20%. So something to keep in mind though is corrections, although they are uncomfortable, and I know many times everybody says, hey, look, this time is different. Those are really dangerous words sometimes with investing. Um, when you have a correction and the market takes a hit, we all want to know, hey, when is it going to come back? When is it going to bottom out? We can't time the market. But what we do know is corrections generally happen on average about 18 months. And if you just look at the past 50 years, we've actually had about 24 corrections since 1974. So for 2025, here are a couple of the areas where we're still focusing. We still want to watch inflation. Inflation is going to be a factor that the Federal Reserve is going to watch and monitor when it comes to interest rate decisions. However, the Fed may not want to raise interest rates during these times of volatility. So they will keep watching inflation numbers. They will watch unemployment numbers. And you know what? We may actually see a boring year with the Fed. Interest rates may stagnate for a little while. The economy is still showing signs of strength. Even though we've had a lot of volatility here recently, there are some strengths still with the US economy, but volatility is a concern. It's always a concern. But here's what we have to remember is we want to be proactive and we want to make sure we're focusing on our financial plan, which should be focused on our goals and objectives. And Benjamin Graham, who is the mentor to Warren Buffett, most of you know who Warren Buffett is, very successful investor. Well, he learned under Benjamin Graham. And Benjamin Graham said that successful investing is about managing risk, not avoiding it. Because if we want long-term growth in our portfolio, the price for growth is volatility. And Peter Lynch, one of the best money managers of the 1990s, he ran the Magellan Fund, the flagship fund back then for Fidelity. And Peter Lynch basically shared that, hey, look, more money is lost by clients trying to avoid corrections and downturns than is actually lost during those corrections and downturns. It is always good to look back and just think about historical results from investments. This is a look at the S&P 500 over the past 45 years. You can see since the start date over the past 40, 30, 20 years, there has been tremendous growth. But along the way, there has been a significant amount of volatility. Even over the past 25 years, think about the headlines we've seen. We started off the 21st century with the dot-com and internet bubble burst, followed by 9/11, then the Great Recession from '07 to '09. Then phrases and headlines like Brexit, debt ceiling crisis, a global pandemic, the fastest increase in interest rates in 40 years, and now tariffs. There have been a lot of headlines, but for investors that have done their best to try to stay patient and focus on the long term, they have done really well. So, with all areas of our financial plan, we want to try to be proactive. Tax planning is an area where you should be proactive. What can we do today that may end up resulting in better put us in a better tax situation for the rest of our lives? Does it make sense to do a Roth conversion? Does it make sense to possibly sell some investments while they're down? Other areas of where we should be proactive, though, if you really think about some of the fundamentals we've been talking about for a long time when it comes to financial planning, whether it's good times or bad times, it's wise to have a fully funded emergency fund. It is wise to have no debt if possible. It's wise to live within your means. So during good times, following some of these basic prudent strategies will actually help prepare you for when times get difficult. So I just want to say thank you for blessing us. Most of our clients come from other great clients just like you. If you know somebody that could use a second opinion, that may be concerned right now, that maybe need to talk to somebody that can offer some advice, that's maybe the calm in the middle of the storm, we would love to help your friends, your family. We do serve clients in 34 states. We have an office here in the Triangle area, but we also have a location down in Charlotte where we can actually meet with folks face to face, but we can also conduct a lot of meetings via phone and Zoom. And for those of you who do connect us with folks, we want us to just say thank you for being an SWS ambassador. So thank you for connecting us with friends. But, if you have an opportunity where we could come present or speak to a group, we love going to speak to Financial Peace University classes. If you happen to be facilitating one, keep us in mind. But I just want to say thank you for taking time. Thank you for investing with us a few minutes today as we just touch base on 2024, but also so far in 2025. We will be reaching back out here shortly over the next couple months with our mid-year economic update. But along the way, if you have questions, if you have concerns, please reach out to your wealth management team here at Steward Wealth Strategies. Our strengths are our team, and we're here to serve you. It's an honor, and I just want to say thank you again for trusting us at Steward Wealth Strategies. God bless you.